All right, y'all, weekend's over. Back to making money this week. And by the way, did you see that beautiful breakout pullback? If you watched last Thursday night's video, we finally got that breakout pullback this morning. Hope you guys made a bunch of money on that. Now, we have a lot to cover here tonight because we have three different ranges stacked on top of each other. You know me, I love ranges because I can combine those ranges with the 21 EMA to find consistent, repeatable, dependable winning trades. So in tonight's video, I'm going to show you guys some tricks I like to use combining ranges with the 21 EMA. By the time we're done tonight, I want to make sure you have a game plan to make some money off that 21 EMA tomorrow morning as well. So charts look fantastic right now. Charts are ready. Enough of the intro. As always, thanks for tuning in and supporting our channel. Let's now roll those sleeves up and have a great week in front of us here. Charts ready to go tonight. S&P SPYs ready to go tonight. Nasdaq triple Qs are always ready here in this video. I got two important clues on these charts tonight that are telling us where the money is made tomorrow morning. One of those two clues is right here on these hourly time frames. I like to use the hourly chart as an overall directional filter. It's very easy to see right now. We are definitely bullish overall on the Nasdaq triple Qs and bullish overall on the S&P and the SPY. We'll use that as our directional filter right now. The buyers definitely have control of momentum. There's no major news that's scheduled for tomorrow. In fact, no major news until Thursday morning before the holiday weekend this weekend. So we'll dive right into our tick charts. We like to trade off tick charts in our trade room because tick charts make entry timing a whole lot easier. That is a 7,000 tick chart, by the way, if you're watching for the first time. And the only indicator I use, I said it earlier, is that 21 EMA. And tonight we'll unlock some secrets, some tricks I like to use to make some profits consistently off the 21 EMA. The biggest clue though right now, the second clue overall, the biggest clue right now are three ranges. We have a range right here, a range right here, and a range right here. Now, why is that a big clue? Because ranges act like magnets. And we know that we're overall bullish right now on the hourly chart. So the ranges that are the furthest away, like right now, that range down there, that's the furthest away from us right now. This range is a great place to buy a breakout pullback. Previous ranges act like magnets. And the further away we are from those ranges, the more desirable they become to trade a breakout pullback. Now tonight, I want to show you all two different tricks I like to use to time the perfect breakout pullback using that 21 EMA. But what about these ranges up top here? What about that range and that range? Yeah, well, those aren't allowing us to buy a breakout pullback. So tonight, I want to talk about one more trick I like to use, one more trick I'll use with the 21 EMA that will tell us how and where to use those ranges tomorrow and later on in the week. So first things first here, I love to get a breakout pullback right now out of that breakout pullback zone. Two ways I like to use the 21 EMA is I love to see a pullback right now, get below that 21 EMA and trap the bears in. Let them try once, let them try twice. Now, why twice? Because once they try twice, now I know where their stops are and I can buy right into their stop losses. So one of two ways I like to use the 21 EMA is just like we saw back here, right? We see a nice deep pullback, and as it pulls back to that 21 EMA, the bears try once, the bears try twice, and we look for what's basically a bear trap pattern, right? Bear trap pattern is one of two ways, time entries off the 21 EMA. But let's now take this one step further. Once I get that bear trap down here, trapping the bears in off the 21 EMA, now a second way I'll use it is as we start running back higher again. Remember, in a big move up like this, the buyers are going to want to go back up and take out that high. Now pay attention. A second way to use the 21 EMA is on the move back up to retest the high. This is one of my favorite ways to use it. Separation off the moving average. As it begins pulling back right now, I'm going to look for signs of separation. Separation like we saw right there. As we run up, we pull back, we go higher, we're separating off that moving average. Look what happens right there. Higher high in price, below that low, everyone piles on right there. So a second way I will use the 21 EMA is with separation. I'm looking for a separation of that moving average, a higher high in price, and once I have that, I can add to my winners. In our trade room, we always say, bear trap, one try, two try, bear trap off moving average, and then look for that separation. Separation equals strength. Those are two easy ways I can time entries with the 21 EMA as we go back up to retest the high. Now, I want to talk about that one key giveaway as we go higher here. Before we do that though, let's talk about one variation of this, because sometimes we'll get that strong run down and we're not going to get that bear trap down there. Sometimes we don't get that bear trap, and what happens is it just whoop and runs right back up again. If I don't get that bear trap down there and it starts to grind going higher up here, remember that idea of that separation? If we start seeing it grind above that moving average, again, it will pop up, it will hold that moving average, start grinding up that moving average. If that happens now we go out and we find a channel off the highs, off the low. Now watch closely here. The key is I want to get underneath the prior swing and I want to buy that first test off of that low. Again, on this one, I'm not going to get that bear trap down there. It'll pop back above the moving average and start grinding. It may not give us much separation, just kind of grind above that moving average. If that happens, find that channel, and whatever you do, don't miss that first test off the low of that channel. We call this first test the best test in our trade room. And if we're lucky, we'll get an add-on here. Think about those two tries again. Bears once, bears twice, and we can stack them all now on top of each other. Two tries, separation above that moving average. We can keep on stacking these techniques right back on top of each other as we go higher. So watch that first test off the low, look for that bear trap, two tries, below the moving average, and then look for one more separation off that moving average and grab that add-on. Now, one more variation of this, I promise we'll talk about if you go higher here in just a moment. Every once in a while, we see a nice strong pullback off of this high. We'll get that bear trap down here, bears once, bears twice. We'll get a nice, easy, winning bear trap going higher. But every once in a while, the strength of that move down is so hard, so strong, we will hold the underbelly of that range and make another leg lower. Now, I'm going to warn you right now, this will feel very bearish. This will feel like a reversal. But remember where we are on the hourly time frame. This we call a retest trade. Now, retest trades are some of our favorite trades every week in our trade room because now I can do it again. Those same techniques mentioned earlier about how to use that 21 EMA as they retest that low now, this is a horrible place to be selling. We're overall bullish right now on the hourly. If it's a bad place to sell, it's a great place for a bear trap. Once again, one easy way to make money consistently with the 21 EMA, find a range, find a breakout, pull back off it, and trap those bears in. Two tries below it. And what did we say earlier? Separation equals strength. Get that separation of the moving average, that higher high in price, and add to your winners. The easiest way to make a lot more money, guys, is to add to your winners. Bear trap, add on, two easy ways to use that 21 EMA. Now, let's now talk about as we go higher here. Before we dive into that though, let's slow down for a couple of seconds because I know a lot of you guys watching right now, you're here for the first time right now. I know most folks watching, you guys know these patterns already. You're making money with these already. But if you're tuning in for the first time right now, this might be a brand new language, a brand new strategy. Don't you worry, I teach this entire system in our free trading course. In fact, I have a ton of examples of bear traps and add-ons. I want to help you all time better entries with this technique. So what I'll do is I'll put a link up topper for you, upper right-hand corner, hit that link that popped up there and take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my my 4 favorite entry setups. They all use the 21 EMA, so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current strategy, what are you waiting for? Hit that link that popped up there. Take and watch that free trading course. You're going to love all the trade examples I include in that short video series. The best part is it is completely 100% free for you. And again, a lot of examples in that free course. We use the moving average to earn consistent profits. Keep in mind too, guys, I'm going to put all the important links you'll need below this video, then the description of the video. Start first with the free video course. Most folks start making money all on their own with that free video course. Start there first. And keep in mind too, guys, if you're on Twitter or X, as the kids call it these days, I post a ton of charts and videos and mindset stuff on X in between these YouTube videos. So follow me there. All the information you'll need to learn more, hopefully earn a lot more. I'll link it below the video here tonight down in the description. All right, I've made you guys wait long enough. I wanted to make sure we took a pit stop there, though, and shared that link with all the new students here this afternoon, because I'm sure if you're here right now for the first time, this stuff might be a bit over your head right now. Let's now talk about going higher here, because this is a third way I like to use the 21 EMA. Now, remember, if we pull back right now, that range below us, remember, the trick is you find ranges. Ranges act like magnets. And the range that is the furthest away from you, which is this range right here, right? That's the furthest away. That's the one that's most desirable to buy low, and that's what we use for a breakout pullback. Now, think about going higher here right now. As we go higher, now we're going to unlock this range and this range. But how do we use the 21 EMA? I'm glad you asked. It's very simple. As we go higher here, I'm looking for separation. Separation is the easy giveaway. I mentioned earlier, separation equals strength, right? So imagine now for a moment. Imagine now we pop up and we start seeing some separation off of that moving average, right? Nice strong separation going higher. That is strength. And if that shows up, now we know that this range can be used for a breakout pullback. And we'll use the same basic technique. We'll pull back, get below that 21 EMA, get the bear trap 1 and 2, and add to our winner by using the same separation technique we mentioned earlier. The entry tactics here are going to be pretty much the exact same thing, right? We get the bear trap below it, and we get the add-on as we go above it. Targets coming off on the retest of that high. But by now, maybe you're wondering, what if we don't get separation up here? Right? What if something like this happens? What if we start to push up here and we don't get separation? Right? Like right now, we're not getting any separation off that moving average right now. So what would I do if we keep on grinding higher, but we're not seeing separation? What does that tell you? It tells you that, okay, we're bullish, we know that, but we're not seeing a lot of strength. See, now this range becomes a whole lot more desirable. Makes sense, right? Because why? Because now we're not seeing evidence of strength up here. But again, we know that the ranges, now don't get me wrong, I would love to go all the way back to that previous range. That would be the dream scenario for us to buy tomorrow. But if we grind higher and we don't get separation, it's more likely now we'll use the second range, the one right in the middle. Makes sense, right? So if we don't see separation, then I start going, okay, let's use that range below us. Let's get back down. Again, breakout pullbacks are very common in range markets. Same thing. Bears once, bears twice. Remember, always a higher high, right? A lot of examples of those in the free video course. So make sure you take that free class. You'll love that free course. It'll open up a lot more of these tricks I'm talking about here in this video. So 2 tries, and again, as it pops higher, it's always that second aspect, which of course is that separation off the moving average and that add-on from there. All right, guys? So again, quick recap on this, right? If all we get right now is a pullback now, this range back here allows me to buy nice and low. Right? Buy low, comparable to where we are right now. Deep pullback, trap the bears up to 21 EMA, squeeze those stops back up again. okay? If we grind, if we slowly grind here right now, again, no separation, right? No separation. Now, this range below us. Now, this one becomes, and again, we still like the one below that, but now it's more realistic now. If we start slowly grinding higher here right now, it's much more realistic now for a breakout pullback off of that trading range, okay? And again, how do we know when to use this range? We know when to use this range if it pops up, it'll pop up and begin to separate. And you'll see it, right? You'll see it. It'll pop up, it'll separate, it won't pull back to the moving average. Once I see that, bingo. Now we know we have strength with the 21 EMA. I can use that previous range now, and we use that for, you guessed it, another breakout pullback. We pull back, and again, same idea, right? The entry patterns don't change. It just determines we use the strength of the moving average to tell us, is it this range, or this range down below us. Now you know the basic stuff on that. Let's go take a look now over on the Nasdaq, because the Nasdaq is similar, but it's a bit different. I think that makes pretty good sense right there on this S&P. Let's go grab the Nasdaq right now. The Nasdaq's getting lonely here over on the NQ. Obviously, very easy to see right now. This hourly time frame is very bullish overall. We want to focus on the buy side here right now. And before I talk about the tick charts here and entry timing in the Nasdaq, if you're enjoying this video tonight, please help me grow this channel, will you? By hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in and supporting my channel, my videos here tonight. So thank you guys for the likes, subscribes, all the ongoing support. Now I promise I'm done begging for likes and subs. Let's now dive in and talk about that Nasdaq here. Now, Nasdaq right now, this is a really interesting chart. Same three ranges. Well, a little bit different, right? Got a range down here. Okay, range right there, range right here, and a range right here. The basic idea of this is almost the exact same, right? It's almost the exact same. So, for example, that range right here, if all we get is this, if we don't go any higher, okay, then we're still looking for a pullback. Now, in this situation, because we are, this is very important by the way, because we are so far away from that range, right? Because we are, remember, everything's relative. Everything's relative. Everything's compared to this high right here, okay? We're so far away from that range, it's not as likely we go all the way back to that trading range. What's more likely is we go back to something above that range. Remember, the markets, buyers always want to buy low. They always want to buy low, right? So comparably speaking, I can buy low off of that range. I can't buy low off of the middle range, right? We got to go higher for that to make sense to buy a pullback there. So in that situation, again, on the S&P, quickly here on the S&P, I apologize, on the S&P, that range isn't that far away, right? It's perfect. It's perfect. The one on the Nasdaq, though, is a lot further away. So therefore, that area, that 90, that 264 level is more likely now for a pullback, hold off that area, and again, same idea, right? Like we saw this morning in the trade room, right? We pull back, the bears try once, the bears try twice. Again, that's one easy way to use the moving average. Pull back, bears once, bears twice. In other words, you trap traders on the wrong side of that 21 EMA. The hourly time frame is the directional filter. If we're bullish on the hourly time frame, now as I pull back below that 21 EMA, the range breakout pullback zone's my sweet spot there. We trap those bears in, we squeeze those stops. If you're caught short and you get stopped out, you're buying your way out of that position. That's why those bear traps work so well. And the second way to use the 21 EMA is with this add-on, right? It's a bear trap and an add-on, bear trap and an add-on. And just like we saw earlier on the S&P right now, if all we get now is a slow grinding market up here, if we don't see any separation, okay, we're still bullish, but we're not aggressively strong bullish, right? We're kind of slowly grinding. If that happens now, yeah, see now that range, again, everything is compared to the recent high. So if we grind up a little bit going higher, no separation, Now a pullback here, okay, this is buying low, right? Comparably speaking, that is buying low. And again, I don't mean to be a broken record tonight, but same idea, right? The bear trap, right, and the back on. And just like I mentioned earlier on the S&P, right? It could be a V bottom, it could be a retest trade. So all the variations I discussed earlier in the S&P can also be applied there as well. And of course, the final one here is if we do see it again, if we see it separate, right? Now think about that idea. Everything's relative. So if I see it separate and really begin running higher here right now you tell me, right? Can I buy this? Is that buying low now? It is. It is if we make a strong run going higher, right? Remember, everything's relative. If I see a nice big pop higher, good strength up here, now I can buy that breakout pullback off of this recent range because now, comparably speaking, that is allowing me to buy low. But again, if all I get is a pullback now, I got to go back to a previous range because again, that is comparably speaking allowing me now to buy low. So hopefully you guys can see the technique I'm talking about. Find the ranges, get away from those ranges. That way, comparably speaking, you can use them for breakout pullbacks. And then it all comes down to that 21 EMA, right? Run it lower. Again, wherever we are, comparably speaking, run it lower, trap those bears in, squeeze those stops, and run that sucker back up again. And again, if it V bottoms off that low, that's one variation. Find that new channel and don't miss that first test is the best test off of that channel. Or again, oftentimes it'll run lower. We'll get that nice, easy bear trap. It'll pop up. It'll hold the underbelly of that range, make another leg lower. We call these retest trades. In our trade room, they retest that low and we do it again. This is not a bear market. This is an easy bear trap down here. Bears once, bears twice, and we squeeze those stops. And the target, of course, now is back up to retest these big highs overhead. All right, guys, a masterclass on selecting the right ranges, how to use a 21 EMA. Did you learn anything new in tonight's video? Let me know in the comment section below. I would love to know. Have you been aware of this before? Is something new for you? Let me know in the comment section below. Always appreciate you guys' feedback here. I love seeing you guys learn new things here on these videos. Now, don't forget, tomorrow morning, we're going to trade this stuff together in our trade room. Every morning, 8 o'clock Eastern time. I can't think of any better way to learn this stuff and start making consistent, repeatable, dependable profits with these techniques. Come out and do it with us every morning in the morning trade room. As always, I'll put all the important links you'll need to learn the strategy, time better entries, get your confidence back in your trading. I'll put all the links down below this video, description of the video tonight. So start there first. Enjoy all those trade examples with the free video course. Then come join me in the morning trade room and we'll trade this stuff together. In the meantime, guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.